take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah, yeah.
Everybody, happy Monday. Welcome to the morning show. Stock Market TV. Spencer, JC, Steve, Alfonso. What do you think you want to talk about today? Maybe some monthly candles? Maybe some monthly candles, right? Maybe. But also feels like a good day for a squeeze, for some memes. I like that. We got some new GameStop developments to talk about. Who was that mystery June 20th GameStop call buyer? I wonder. Well, we know now it was Rowan Kitty, so we'll talk about that. That's igniting a new frenzy this morning. We got some other things on the list as well. Brian Shannon is the guest today. Alphatrends. He'll be on at 9. Always great to talk to Brian. So you know what to do. Smash the like. Drop a comment, like, whatever. Tell your neighbors. It's go time.
All right, ladies and gentlemen, welcome back to the morning show live from Avalon, New Jersey.
Hey.
Very nice. Very nice. How we doing? How we doing? Audio, video? Are we good?
This is Beach House JC. We got Beach House JC now for the next month.
I'm still not going to have as good a tan as you, though.
No.
You know?
No.
How am I looking?
You'll get close, though.
Let me tell you something. It's nice here, bro. It's really nice. Every time I'm here, I say the same thing. The food is really good around here. Like everywhere you go, little breakfast diners, you know, bougie restaurants, middle of the road stuff. The pizza's good. It's like
you feel right at home. There's enough.
Honestly, it's pretty impressive. And even the bougiest restaurants, like they're kid friendly. Like we're looking at this new restaurant that just opened up. Sure enough, kids menu. Like even like this is like a family place. So like, if you got a zillion kids like I do, but you don't want to sacrifice, you know, food and stuff like that and good booze, the liquor store, Fred's Liquors, is like legendary. The wine shop is fantastic. Like, I don't have any complaints. You know, there's not that many people. They don't have any hotels here, so it's just houses, so you don't get the riffraff. You got this dude 10 minutes away. I mean,
you're saying all of this. You're painting a lovely picture for everyone. But myself, like Dawson in the chat, when I hear JC's at the Jersey Shore, I just see him like fist pumping and sweating his gloves. That's what I'm going to continue to imagine for you.
Those types of people are not allowed on this island. You know, that's like north of Atlantic City. It's gross up there. I'm all the way down. I'm like east of DC. I'm so far south. It's a joke. Like when you think of Florida, you think of like weird alligator people, right? But there are really nice areas of Florida too, you know?
There's a lot of weird alligator people too, though. So,
JC, I'd imagine it's pretty empty, right? It's pretty early in the season to be going down the shore.
No, it's right on time, isn't it?
Dude, it's perfect, man. Right. It's a nice little breeze, bro. Oh, it's so nice. It's so nice.
Months, and it starts now.
Listen, we got short squeezes to talk about. Hit it, Spencer. Do it.
Oh,
do it.
Excuse me.
Do it. All right. So we got a nice little squeeze going, but let's just go over quickly what the market is doing. We've got Dow futures flat, doing absolutely nothing. We got S&P futures. Whoops, what did I just do? See what happens when I'm out of my element?
You should be fine in the trading view.
S&P futures are up 13 points, 25 basis points, 5,300 for S&P futures. Russell 2000 futures up 1% today. 2,100 on the Russell 2000 futures. That's actually very interesting. NASDAQ futures 60 basis points, pushing 18,700 on the NASDAQ futures. You've got gold up 25 basis points, 23.50. You got silver up 0.5%, $30.60. Copper's up 1%, $4.65. You got the VIX pretty much flat. You got crude oil flat, hovering around 77. Anything other interesting that stands out? Ethereum up 1%, 3,800. You got the BTC up 2.5%, 1,600 points for the BTC, 69,300. Very, very interesting there. And then, of course, just to finish up with the Solana. Solana this morning it's up 1.5%. Right, very nice. 165 for the Solana. Total crypto market cap, Spencer Israel, we are looking at $2.5 trillion, inching its way higher towards 3 trillion. But the story of the day has to be GameStop. And before we get into it, I just want to put some things in perspective. GameStop's up 82%. It's up 73% right now, $40. I just want to put things in perspective. This is an $8 billion market cap company. This is a company that most
anymore,
of us.
It's not.
I'm sorry?
Not, it's $14 billion now.
Well, it is now, right? Went out yesterday. Either way, 8 billion, 14 billion, that and zero is the exact same thing. So I just want everybody to understand this, put things in perspective. The amount of discussion and conversation that's being had about this particular stock,
yeah, it's absurd.
Relative to its importance on Earth is night and day, right? Is it fun? Is it interesting? Is it exciting? Is it funny? Can you trade it, make money from it, lose money real quick? All those things, yes, absolutely. Does it matter? No, doesn't matter at all. All these high short interest names, I shouldn't say all of them. Almost all of these high short interest names are terrible companies on their way to bankruptcy. They don't go straight down, and you have monster squeezes along the way. Maybe some of them won't go bankrupt, but there's a reason they have such a high short interest, because these things are useless, right? So again, other than a trading vehicle and some fun gossip. How did I do, Strazza? Is that about right? What did I miss?
Yes, but so two things. One, it doesn't matter, but there's a reason why you hear about it so much. There's a reason why they made a movie about it, right? We talk about what the media's goals and objectives are and how that's different from our goals and objectives here, right? So they know that this is going to click. This is going to click really well. They're going to talk about it. Also, it's hilarious. What's not to love about this story? Right. I was just on the phone with a colleague of ours before the show this morning, and he said to me, so do we know if this is actually Roaring Kitty or if he sold his account? I said, still no. That's the $1 million question, right? So the whole thing is kind of, we like this stuff when it happens. It's fun. It takes us away from our day-to-day a little bit, right? We get to laugh and giggle at this stuff. Is it material? No. Will there be sympathy plays? Peter Segura in the chat. Hell yes. Look at AMC. I think it's up 30% right now.
Yeah,
okay.
AMC, throw up the dual pane, the slide 6, and then throw up slide 7 so you can see the whole list. And so yeah, there's some sympathy plays here for sure.
And it comes back to market mechanics, right? We've talked about this before. As margin requirements are heightened and they see these squeeze plays working really well, it adds fuel to the fire, and you see other squeeze plays start squeezing as well. It's what we see when we look at our universe. A day GameStop's up 100%, we'll notice that breadth is very good among the heavily shorted names, right? So that's the kind of day we're entering here today, and maybe the kind of week that we're walking into this week, because there tends to be, you tend to get 2 or 3 days. You tend to get follow through on a big squeeze day. We saw it with Chewy last week, right? You get the big move and then another green candle. So this probably runs into tomorrow or Wednesday.
Can you throw up the list? So this is our high short interest list. Can you walk through basically what this looks like, why it's important to us, and why it's not just something we look at today, but something we're regularly monitoring?
And Fonz, why don't you get the SunPower chart out? So we sort this all different ways. We sort this by just about every column shown here. If we shorted it by the 10-day change, you would see some monster moves just in the past 2 weeks, right? Not from the likes of GameStop and AMC, but plenty of other names have been working. In this table, we're sorting by short interest. This is just showing you what stocks have the highest percentage of their outstanding shares held short. And SunPower really stands out. I don't know if we could throw the chart up. 9 out of every 10 shares are held short in this name. This stock's been around forever. This is one that will get tangled up in election conversations. This is one that has been bet against by a long time. Consistently, it's always had a pretty high short interest. 90% is pretty egregious. And if you just pick levels, right, and manage your risk responsibly in names like this, I mean, these are the kinds of setups that we have. We'll throw up the GameStop chart next. We got a really clear level there that we could have traded this move against. So something like SunPower, the most bet against stocks in the market, at least over the past few weeks, bears can't take them down. In fact, this one trapped the bears and squeezed higher over the past couple of weeks. It's up more than the double off of those record lows, right? So the shake is in place. We're squeezing back above the pivot lows. These are the kind of setups we're looking for. It's rare that you're going to find one that looks like this flipped on its head, right? That's breaking out of a nice based all-time highs. We do have those. Sean just put an options trade on one of them, CNX, but it's rare. It's a lot more common for the charts in our freshly squeezed universe to look like this one, scrounging around the lows of some sort of a range, and you're buying downtrends, right? Typically betting on a counter trend move. So this one stands out. Throw up the GameStop chart. Same thing. Maybe it's a coincidence that this is all happening right here. But this was the scene of the crime back in, looks like 2007 and again 2013. Trap the bears. No, this isn't the one. The one I dropped in. I thought you liked the monthly MACD. I put a monthly PPO on the one in the chat for JC.
I love how you do that.
Signal. We're using it more and more. It's not like a day trading signal at all, but this is nice. These things all happening here together, really nice. We're seeing the biggest moves from GameStop on a 1, 2, 3, 5 day rate of change basis, right? So biggest short-term momentum in this name since the blow-off move in 21. The animal spirits are alive and well. You can trade these stocks right now. You can trade them pretty aggressively. As long as you know where you're out, these trades are working.
Do we have the screenshot of the post, the Reddit post that ignited this rally this morning? I think we do. There we go. Look at that.
We don't know if this is real. We don't know who this is. The market seems convinced it is Roaring Kitty. It looks like he's got about 115 million long position.
And then the interesting one to me is the one below that.
Yeah.
The June
that's
21.
Yeah.
June 21st, I should say. $20 calls.
So what does that mean? He's in June 21s. The theta is working against him. He's probably out today. That's what this means, everybody. JC, is that fair? If you're not out on a day like today, you're holding these June 21 calls in this size. You sell something today.
Yeah, this is just a rule of thumb that I learned from Sean. As we get into the month of expiration, we want to start looking to, get out of positions because everything is working against us. Yeah. In this particular case, however, these are the 20 calls.
He's got 18 days. He's well in the money, but still.
But you're not getting any theta decay there if you got the 20 calls. So he's actually got a synthetic long position. So in the case of an out of the money call, that would be one thing. But if he has the 20 calls, which I wasn't aware of that, if he's got the 20 calls, he's good. It's all intrinsic value. So he has a synthetic long position. Doesn't mean that he won't get out of it today. He could. There's nothing wrong with taking some profits, obviously, but it's not like he has to.
Yeah. All right. Yeah. So he just owns more shares. It's a giant position.
Again, I want to reiterate a few things. First of all, this does not matter. Spencer, I dropped you the link. If you can add those, that'd be great.
Yeah, which show?
The ones that I sent you. So if you can kind of visualize what this whole global macro landscape looks like, and you think of the $130 trillion bond market and $100 trillion stock market, you think about even gold, 16, 17 trillion, whatever it is these days, even cryptocurrencies, $2.5 trillion. Like that's the world that we live in. These don't matter. And just to be clear, we're seeing these kind of squeezes all over the place. Just to throw you a few names, I was looking at some monthly candlesticks. You look at these meme coins, Floki, Bonk, Brett, Mog, Pepe, all making new all-time monthly closing highs. I brought a chart of Pepe just to did that one bring in? Yeah, there it is, slide 2. You can throw that one up just so the folks can see one of them. But all these things making new all-time monthly closing highs. So, you know, there's a theme that's been going around, and it's not just this morning of these short squeezes getting going. And then Strazza always makes a great point of this. You know, the catalyst to really get these squeezes going is to get the squeeze going, right? Once you see the momentum coming in and these shorts starting to get squeezed, what's that going to do? That's going to bring in the momentum players like us. It's going to which is going to cause even more shorts to get squeezed, which causes the brokers themselves to raise margin requirements all at the same time to all of these high short interest names, which causes a bigger short squeeze, which brings in more momentum players, right? So it feeds on itself. And I don't want to call this a self-fulfilling prophecy, because that's not what this is, right? This is a chain of events that comes in a sequential form that begins with a heavy short interest that sets the stage, a high number of days to cover. That is, how many days is it going to take for all these shorts to cover at your average daily volume? And then once it gets going, that's the sequence of events that really creates these monster squeezes. So that's what we're watching. So again, not a self-fulfilling prophecy. That's something else. That's not something that actually exists. That's not a thing. This is how short squeezes work. Funny how nobody ever says that fundamental analysis is a self-fulfilling prophecy. Funny how that works, right?
Yeah, I don't think too much about it. You want to buy these names either on strength, or in the case of something like, just zoom out a couple of weeks on something like GameStop or AMC, you can buy weakness off of momentum surges, right? So you wait for like the momentum surge where we were all talking GameStop's up 100% today. Then you see the big come down. You could buy that weakness because you're still kind of buying strength, right? Yeah. In other words, you don't want to buy into the 100% day, but this thing got started a month ago now. You could have bought the weakness off of that momentum surge. Now we're giving it another go. Other ones that trade like more normal short squeezes, you could buy them up 5-10%, right? Again, once the wheels are in motion, you're just jumping on that train.
Yeah.
That's all I got on these. The Jasmy, you know, some of these cryptos, dude, breadth is slowly improving. It's not a big deal. It's barely even noticeable yet, but we are seeing some of these, you know, altcoins really start ripping, breaking out of these multi-month resolutions. That's what we would like. Since we talked about the Jasmy on here last week, it's up 200%. These things are going. The leaders are leading in a big way. Now we just want to see that expansion continue to move throughout the space. But I think we're moving in the right direction. Albeit,
I want to talk about. Can we talk about actual important assets now? Did we get it out of the way? Roaring Kitty, all that stuff. Are we good? Are we happy now?
I've been done with this.
I just want to add that if you want more of this squeezy goodness, yeah,
we dropped
squeezed.
We dropped like
freshly squeezed. The latest freshly squeezed went over the weekend.
We just went for it on this one. So what we did here, I mean, if we were unsure about whether or not we wanted to cover one, we would just include it. We're just outlining the levels because so many of these names, like I said, are just working right now. I think we put like 15 setups in here. Some of them are going to be really good.
Okay. You ready? Real assets now?
Sure.
Okay.
Real money? No more funny money?
No, let's talk real assets.
Okay.
Throw up slide 9, 10, 11. And what are we looking at here? Right? What are we looking at here? These are the Fab 5 stocks, guys. These are the Fab 5 groups of stocks. These are the most important stocks in the market that we have discussed all year. If they're above their prior cycle's peak, it's hard to be overly bearish on this market. I'm going to show you a few of those now. This is the New York Stock Exchange Broker Dealers Index making new all-time highs. Go to the next one, Spencer. You're looking at home builders, right? All holding above those former levels. Look at semiconductors, right? Next. All holding above those prior cycles highs. So coming into the year, it's like, okay, if these things start rolling over and they're going to lose those former prior cycles highs, that's a problem. And most likely the rest of the market's going to follow. You can add industrials to this list. You can add technology as a group to this list. I know I'm double dipping a little bit with technology and semiconductors. Just understand what drives these indexes are very different. There are semiconductors and technology, of course, but it's really driven by Microsoft and Apple, while semiconductors are much more semi-heavy, of course, a lot of Nvidia and everything like that. And then go to the next chart to really put things in perspective. We're looking at the NASDAQ and we're looking at the S&P 500 making new all-time highs. And one thing that we definitely don't see in downtrends is new all-time highs, right? I've gone back and done the work. Go back and you study every downtrend in history. Pick your favorite one, look at all of them. You know what you're not going to find? You're not going to find a lot of new all-time highs in those downtrends, right? So we want to think about what's it going to take to reverse this structural bull market that we've been in place for. By the way, the 2-year anniversary is going to be next week, funny enough. So 2 years into this bull market, how about that? And then also how sentiment quickly shifted from February, where sentiment was a headwind, right? We were seeing some of the most bullish and optimistic levels in sentiment that we had seen in years, really since the last peak. And very quickly, sentiment shifted to where this summer it's possibly a tailwind. Maybe not to an extreme, but certainly in that direction. Definitely no longer the headwind that it was in February. And what did it take? It took 8% correction in the NASDAQ. You did have a double-digit correction in the Russell 2000 and transports. You had a 16% correction in regional banks. 7-8% correction in consumer discretionary and some of these other sectors. Like, you had corrections, but man, sentiment changed very quickly. I mean, these corrections weren't that bad. There was a lot of sideways action for several months. These indexes went nowhere for 3 months. Like, you did see that, but I got to say, now in hindsight, I am somewhat surprised that sentiment turned this pessimistic this quickly, despite not much of a correction, right? More of a correction through time than through price, right?
And you'll talk more about this tonight, I should add.
Ooh, yes. So tonight is our monthly chart strategy session. I say this every month for good reason. Guys, if you never listen to a word I say forever, listen to this. Once a month, one time a month, right? You get new data points, new end of month data. Once a month, that's 12 times a year. It takes 30 minutes, right? Maybe if you're crazy like me, maybe it'll take you an hour or two, whatever. For normal investors, it might take you 20, 30 minutes if you take your time. Pick your list of what you think are the most important assets in the world. And ours are probably going to be pretty similar, but you're going to have some stuff that's more important to you than it is to me. I'm definitely going to have some stuff that's more important to me than it is to you. But make your list. Your major indexes, S&P, Dow, Russell 2000, NASDAQ, right? All of those, your most important sectors, financials, industrials, technology, semiconductors, countries around the world that you think are really important, like Japan and Germany and Brazil, China, right? Individual stocks, some of the bellwethers, JP Morgan, Freeport-McMoran, Goldman Sachs, Microsoft, Apple, Nvidia. Like, pick your bellwethers, Google, Meta, right? Pick your bellwethers. Caterpillar, in my opinion, is one of those better bellwethers. Honeywell. Pick your bellwethers of the most important sectors. Put them all in together. Your international indexes, sectors, the US dollar, gold, copper, silver, crude oil, right? These are the most important assets in the world. Bitcoin and Ethereum, right? Make your list. And if you haven't made your list, email me. I'll send you my list, right? And my list it's not perfect, but it'll get you 90% of the way there. And then you'll be, JC, I don't care about the growth value ratio. I'm just going to delete that one from your list. And I'm going to add Pepe token, because Pepe token is one of the most important assets to me, right? Whatever it is, it doesn't matter. But I can assure you that my list will get you 90% of the way there. So email me, Spencer. Put there where people can find us, please, and email me. If you don't have a list, I'll send you mine. And I would encourage you to make your own list. And then tonight, for premium members of All-Star Charts, we're going to sit there and we're going to go through the most important ones. And the beauty of these monthly candlesticks is that not only does it help us identify the direction of primary trends, it forces us to do that. We get no choice. It's one data point, right? So it really brings us back home, brings us back to the primary trends, because it's so easy to get lost in what did the Dow do today? The market, the roaring city, the Trump, right? What's that?
The GameStop.
Yeah, I mean, listen, it's easy to get lost in the noise. These monthly candlesticks, I promise you guys from the bottom of my heart, is the most important 6 hours I spend all year. Think about it. 12 times a year, 30 minutes a year. That's 6 hours. Nothing I do for work at all, for the market, nothing is as important as those 6 hours in the year. And by the way, over the years, I've expressed these thoughts a lot, as you guys are probably well aware. I can't tell you how many emails I've gotten. Be like, JC, bro, you were so right, man. Oh, these monthly candles are so, right? I get the feedback. So not only does it add a lot of value to me, it adds a lot of value to a lot of people I've told this to. Right?
Yeah, people, it's a cliche to say when in doubt, zoom out, but it's not just a cliche. It actually works, or maybe I should say there is a reason it is a cliche, right? Cliches are cliches for a reason.
Cliche, or is it just a good rule of thumb?
I don't know, but it works, and that's exactly what you do.
Yeah, I don't think that's a cliche.
Anyway, I dropped the link. It's pinned to the top of the chat on YouTube. It's also in that QR code that's on the screen. Tonight's call, 6 p.m. Yeah.
6 p.m. Eastern time. Let's
Eastern
go,
time.
baby. Let's go. Monthly candles. Woo, woo.
All right.
Who gets more excited about monthly candles than me? Anybody?
No. No one looks forward to them more than you.
It's good times, man. It's good times. Nerd alert.
All right. We're gonna have Brian Shannon on in a second. Before we get him on, you want to talk about what, like Nvidia? We have an Nvidia
tell me
chart.
What I need to know. What did I miss? Tell me. Want to hit a bumper?
There was a thing over the weekend. There's a big conference out, I believe, I want to say in Taiwan, right? Yeah, Taipei. And the takeaway from that, from the remarks from Jensen Huang, were basically they're going to be updating their AI chips every single year. That's the update.
Is that like a big deal?
Yeah, it's bullish. They talked a lot about bullish. Said a lot of bullish things, right? But that was the big one. New upgrade cycles once a year for their family of AI chips, and that's more or less it. So,
AMD also. So these things will be announced at the same time going forward, it seems. Right?
AMD up 2% this morning. I don't know about any conferences in Taipei, but I'll tell you what, they got great speakeasies in Taipei. Yeah. Like speakeasy type bars where like the bartenders wear suspenders and you pay extra for them to take longer to make your drink, like those kind of places.
I do. Yeah.
They make great cocktails. They got a bunch of great, because you know what? They got like New Yorkers. They got a bunch of New Yorkers in Taipei. So the New Yorkers took like all the best speakeasy bars in the city and they opened up similar versions of them in Taipei, which is cool. Yeah.
That's good.
Some of them even have like New York themes. It's like this looks familiar. I've been to a place like this before.
They have a new one in Miami. It's a 90s video store. Like they're selling VHS movies and stuff. And you go through like some hidden door to the drink spot.
So fancy.
Yeah.
Anything for a gimmick.
Yeah. So anyway, Spencer, it's more about the installed base at this point than the new chips, right? What's really important to recognize here for the business that Nvidia finds themselves in now is they sell the chips, but then they also make the software that the chips have to run on. And they get paid monthly on that, right? And ideally forever. And then ideally their customers buy new chips every year or few years and then keep paying on that software. So what they're doing is they're building a huge installed base, which at least for now, being as they have no competition, it seems, at least for the quality of the chip that they're making, that's going to be pretty sticky, at least for now, because number two, from what I understand, AMD is very far behind.
They're all looking up at Nvidia, right? Who can say how far behind, but they're all looking up, The
important point about what I just said is this is a subscription revenue business. They're not selling you a computer chip and saying goodbye. Good?
That's it.
Nvidia officially the third largest company right now, sitting at 2.7 trillion versus Apple at 2.9 and Microsoft at 3.
So last May.
So when people are like, "Oh, Nvidia is going to be the largest company in the world," like
Yeah.
That's not that far. It could be the largest company in the world by the end of today.
So last May, we talked about on here, we did a special Twitter Spaces. And one of the things that I was saying, this was 12 months ago now, was Nvidia will be the largest company in the world. All right, we didn't know if it was going to happen last year, this year, next year, but the numbers that they keep putting up now quarter after quarter would support their market cap being larger than both Apple and Microsoft's.
The question is, so great, Nvidia can be the largest company ever.
It will.
That's not a big deal at all. The question is Nvidia going to be the first one to 5 trillion?
Yeah, that's a much better question, right? They're going to be the largest.
What about a 4? You skipped over 4.
Nah, 5.
Go straight for 5.
Straight for 5. Come on, go big or go home, Spencer.
Because that's a double for most of these from here, right? They're all the big guys around 2, 5, 3, right?
60-something%.
So,
yeah, first to 5 trillion. I mean, Nvidia's got the momentum.
Nvidia probably does it. Now, do we look back 10 years from now and say Nvidia is still the largest company in the world? That's going to be the fun part. We'll see.
So fun.
This Friday is the stock split day.
Yeah. So they'll be in the Dow soon. Buy Intel.
Yeah, they'll be in the Dow soon, and now like small mom and pop traders can invest in it, which I think sucks.
You think Intel already knows?
Yeah.
They got an X on their back?
Yeah, they got the nod.
Yeah, they definitely know.
Should we bring on Brian Shannon?
You just don't want mom and pop investors in your stock. That's why I don't like these splits, but whatever.
They want to be in the Dow. You get it.
I get it. It's fine. Whatever. I am no one to question. What's his name? Jason Wang. What's his name?
Benson.
What?
Benson.
Jensen?
No, you had it right.
Yeah, I had it right. I think I said Jason. No.
I'm bringing on Brian Shannon, all right?
Please do. Please do.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Brian Shannon in the house.
I'm wearing the same shirt I wore the very first time I was on here. Isn't that funny?
That's right. That's right. I thought you did that on purpose. You're not that clever?
No, not that clever at all.
No. Brian Shannon, we were all getting a good laugh at you in Sonoma a few weeks ago. We were doing some upgrades on our website, and our developer was kind of showing off, some of the new stuff. So he brought up he does like that way back in time thing, and he went to like a bunch of our old websites and was like, and he brought up like what your website originally looked like, and we were all like, look at Brian Shannon, look.
Was it the blog spot? Is that
the one we all had? Like, no, it was the one with stock twits that we all had.
Okay.
You made a surprise appearance at our conference.
Yes, cool. You made a surprise appearance. Yes.
So, Steve, is it now CAAS instead of SaaS? It's CAAS from what you were saying earlier. Chips as a service.
As a service.
Is that going to be the new buzz phrase people start talking about?
Because it can't be semis as a service, right? That's taken. So
yeah,
I don't like the ring to CAAS.
CAS.
What would you CAS?
I don't know.
It's not a good jingle though. But these guys are finding themselves more and more in the same situation as software companies. I think that's a big deal.
Yeah.
All right, we're not going to sit here and talk about fundamental analysis with Brian Shannon. No, right, this is a sin. It's a sin. It's a sin, Ma. The hoof.
But seriously,
Brian,
how much do you pay attention to this stuff? Like Nvidia's new chip launch day, AMD's new chip launch. You're probably trading stocks like AMD. Are you paying attention to these AI-driven
events themselves?
Just as far as they have the potential to be a catalyst, so I want to manage risk around it. That was actually the first that I heard that Nvidia does service, that they sell service on a subscription basis. Yeah, so that's how up on it I am. I just learned it this morning from you, Steve.
People don't mention it enough that they're actually, this is a subscription revenue business. It's very important. It's very important.
Brian, I want to ask you before we get into who gives a shit. Before we get into the rest of the market, I want to hear your thoughts on the short squeezes. GameStop. We set the stage and we talked about how from a market capitalization standpoint, from a global macro standpoint, this is all irrelevant. as are, a lot of these short interest names. Now, they present tremendous opportunities for traders, right? Which is really the separation that I want to mention. They don't matter at all to 99.99999% of humans, but for traders, they actually present great opportunities, and not just GameStop, but other names with very high short interest, with potential, squeeze ability, right? Can you, I feel like I don't know that I've ever had this conversation with you. How do you think about these high short interest names?
Look, like your Pepe the Frog. I mean, not that there's shorts in there, but that it
My
doesn't matter. Well, I've never heard of Pepe the Frog until you. You seem to be pretty bullish on it, and rightfully so. It's in an uptrend, which, by the way, I think Bitcoin is making its move today, right here, right now.
Wow.
We need sound effects for moments like these.
Yeah.
Okay.
Wow. Brian Shannon says this is it.
We're on the way, so keep your eye on all those little names as well, like Mara, CLSK, Iron, all those guys today. Keep a close eye on them. Their charts aren't that great, but they, some of those have really nice short positions in them. Get back to your original thought, JC. I don't know if you remember the, I think it was called squeezeshort.blogspot.com that I had. Or shortsqueeze.blogspot.com. I had like a picture of this animal looking guy with his head in a vice. And I did it for a little while, kind of anonymously. It was about short squeezes. I wanted to see how difficult it would be to gain traction with a new website. And I was just doing short squeezes. And then I did it for a couple months, and then people realized it was me. But anyways, I'm a big fan of short squeezes. And one of the main things is, there's two things. One, short interest data is really annoying here, that we can only get it about 7 market days after it's actually reported. So at the end of the month, on March 30th, we didn't get those numbers till April 15th. Or something like that, 8-9 market days later. So it's always stale, but it doesn't mean it's not useful, because we can see the trends. Right. And then when we start to put VWAPs on there and say, what's the average price those shorts was initiated during a certain period of time, then we kind of know the boiling point of the water where the lobster starts to roast. The lobster, of course, being the short sellers. That when is the pressure strong enough? What's their break even, and where they start to feel the pressure? So I'm a huge fan of short squeezes. I always have been. And it's not just a simple, straightforward number all the time, especially in a stock like, GameStop, or, when these things get going and then they start to really move higher after several days, they become kind of a perpetual short squeeze machine, because the people who shorted at 25 are now covering at 40, and then the people, then people are starting to short it at 40, they cover at 44, to new shorts at 44, and they cover at 48, as people just try to pick the top all the way up, and they all get run over. So in stocks like those, where you start to see the real move begin, those short interest numbers really start to lose any validity, I think.
A couple of things, Brian, that I want to add to that. Number one, the 2-week delay on the short interest is super annoying. My understanding is that's going to shorten to maybe a few days, and ultimately the blockchain fixes this, and you could see the short interest in real time, right? So how long does it take to get all of this short interest data on the blockchain? Probably a lot longer than we anticipate, but my understanding is this 2-week lag is going to start getting better. That's number one. Number two, does it actually matter to you, Brian Shannon, whether the short interest is 21% or 23.5% or 27%? Like, does it actually matter knowing those details, or is it's a high short interest and that's how I'm going to look at this?
That's pretty, it's the trend and the amount that matter most, because you've got to understand, you realize that, there's a lot of fudge in those numbers, and they're not going to be realistic. So you can't trust them at face value. But if you see the trend and it's a big number, and the short interest ratio, if for people who don't know short interest ratio or days to cover, if the stock trades 1 million shares a day on average, and there's 10 million shares short, the days to cover is 10 days. It would take 10 days of that 1 million shares a day of just the shorts covering. So that tells you how difficult it is for shorts to cover. So of course, the higher the short interest ratio or days to cover, the more difficult it is for those shorts to get out of their position. And that puts more pressure on the upside, hopefully, if once the stock starts moving higher.
If you throw up the, we have a time series of days to cover and short interest on this marathon chart.
MARA?
Yeah.
Yeah.
So what you'll notice is the days to cover ratio tends to peak when price troughs. Do we have it? We think it's even better as an indicator than the short interest itself.
Days to cover.
Yeah.
Well, the thing about days to cover is, for instance, on this one, what I'm looking at, the days to cover is 1.41, according to NASDAQ.com.
Yeah.
49 million shares is what they're showing as the average daily volume. It trades 69, or I'm sorry, it has 69 million shares outstanding. That's as of May 15th. That's compared to April 30th of 59 million. So we know between April 30th and May 15th, the shorts added 10 million shares. That doesn't seem too smart to me. So we know that those people are going to be the first to be under pressure. If you look at the volume weighted average price between April 30th and May 15th, which I'll do for you right now, it looks like right about 19.5. So right now, those new 10 million shares are down about 50 cents per share. Not a big deal. But if this thing gets going with Bitcoin, I think, like I said, breaking out here today, then in the next couple, by the end of the week, I think you could see this Mara, as long as Bitcoin keeps going, you could see this thing really start to cook those shorts in there.
What's your target on Bitcoin? $1 million?
Geez, I'll leave those Bitcoin targets to Kathy, and then she can embarrass herself. I'm not in that game. It's higher. The price target is higher, JC. I honestly don't do price targets. Kathy would,
I thought she trades stocks.
The wealth destroyer. She thinks she does Bitcoin too. She does anything that's popular so she can make a statement and then lose money on it.
Tell me how you really feel.
Yeah,
Brian.
Morningstar called her, and I agree, the wealth destroyer, the world's worst wealth destroyer in fund families. It's just a fact. It's not how I feel.
Wealth destroyer.
What's that?
World's best wealth destroyer.
Yeah.
You have to be good at it to destroy a lot, right?
Yeah, she's superlative at it.
Yeah. Well, good for her. So let's kind of zoom out a little bit and think bigger picture. First of all, can you tell the folks a little bit about your time horizon? How long you tend to hold a position. Sometimes you hold it longer than anticipated, of course. But what is like your overall goal? Like, you're buying a stock today. In a perfect world, you're doing what with that?
Perfect world, it's about 2 to 3 weeks for my preferred way of trading. That's for trades. I hold some stuff longer term. I've had some core crypto, which, by now the cost basis, I don't even know what it is, but I always have some on. But generally, it's 2 to 3 weeks is the ideal time. That means I've got a really nice winner and the market's allowing me to hold it because I'm raising my stops. So I'm up underneath the higher lows. Most trades end up being 2 to 3 days. The losers ideally are day trades that
Right.
I'm wrong right away and I get out. So therefore you could say I'm a terrible day trader because, my swing, what I anticipate to be a swing trade will get stopped out on the first day, therefore skewing the short-term performance of day trades. But 2 to 3 days seems to a lot of times be the number for whatever reason. What my strategy is that I think that my particular talent is I'm very good at knowing exactly when to buy. And I use that. I do that because I'm looking at 6 different time frames, drilling down to the shortest time frame to find that entry point. initially, when I get that first day burst of momentum, I often sell a third of my position just to reduce the risk. So when I buy a stock, I like to go in, a little bit heavier than what you're, supposed to do, which I don't even know what that means. But I like to go in a little bit heavy, feel a little bit uncomfortable from the start, get that first push up, usually the daily R2, the pivot, and then, to reduce my risk and still have a decent sized position on for the swing, so that if, the stock turns back lower, I can get out and maybe it's break even. Overall, say I lose a little bit of money on the 2/3, I took that first third off. So I've minimized my risk there. And then I start to raise my stops up underneath the higher lows, generally on a 10, 15-minute time frame. So, looking at 10 to 15 days worth of data. And then once it really starts to move higher, let's say I bought the stock at 22.
Oh no.
Oh no.
Oh
Wait a
no.
minute. Wait a minute. Wait a minute.
This is the godfather of YouTube. This is
Here we go.
the right.
And
You are a leader in the space of YouTube, Brian Shannon. A pioneer is what I like to call you.
Yeah.
By the way, how many people out there call you a pioneer other than me?
Thank you, JC. Thank you. So back to our example. Let's say I bought the stock at 22 and it runs up to 26, and there's the breakout to the new 52-week high. I almost always sell a third there, or half of my balance on the breakout. There's something just really satisfying about selling the breakout when it gets extended to that level, because you have all these people who read books from 20 years ago that say buy breakouts. And then they buy the breakout and they complain the breakout doesn't work, because how did it get there? Well, it just rallied 4 points or 18% to get there. So, if I don't sell that half of the balance right there, I will raise my stop dramatically on half of it. And on the other half of the position that I have left, I'll use a looser stop, so that if it can continue to move higher, then I allow the opportunity to, continue to trail my stops higher and hopefully, turn it into something much bigger. So the price target is always higher. It's the job of managing risk and letting the market tell me when to get out.
One of the things that you coined that we quote all the time around here is that from failed moves, speaking of those breakouts, from failed moves come fast moves in the opposite direction. Right? And fast and furious moves is what we tend to see. Can you talk a little bit about, how you coined that phrase, how you kind of caught on to this sort of scenario where you get these failed breakdowns that squeeze higher, or, which tends to be more violent than the failed breakouts that start selling off, but you get them in both directions. Can you talk a little bit about that?
It simply came from observing where my big losses come from and where I felt most stupid about taking a loss.
Yep.
So I don't mind taking a loss. That's part of the game. But if I take a loss and then I look at it the next day and I realize I just got shaken out and the stock is ripping higher and I'm sitting there with without a position, then I would feel really stupid and say, what the heck? Why does this keep happening to me? And I can complain that, breakouts don't work, or I can adapt my strategy. I can complain that I was stopped out and it went without me, or I can adapt my strategy. So I look at it and say, that first shakeout is now something that I always anticipate. I'm looking for a stock, in a tight range, and I'd love to see a shakeout for a day and a half. It pops back up into the range, goes sideways for a half a day, and then starts ripping higher. So it's all about the psychology, because you have these people who consider themselves to be very smart. They see a stock in an uptrend that rallied from, let's say, 28 to 32, and now it's turned sideways, and they think, well, I'm going to pick the top here. It's got to go fill that gap down at 28.5. And it breaks down below the support of the last 3-4 days. It breaks below the VWAP from that move. And then they short the stock. And then the holders who aren't really, strong holders, get stopped out as well. So we shake out the weak holders, basically, as they like to say, and suck in new short sellers. Well, when the stock turns back around, because there's a big institution who kind of set this trap, by selling, they have a 5 million share position. We're going to sell 500,000 shares to break the stock down so that we can buy back 1 million shares. Then we come out 500,000 shares ahead with a better cost basis. They absorb all that weak supply. They have new demand. Who's left to sell the stock now that that's happened? And then because of that, you have kind of a liquidity trap where there's no sellers left, and you get that violent move higher, which is just fantastic to participate in.
Let me ask you this. I mean, there's no way to actually know, but in the conversations that you've had with people, and I know you've had a lot of conversations with a lot of institutions, particularly with your work on anchored VWAP, but I'd be curious to see how these conversations maybe shifted to this manipulation. Do you think that there's really a lot of that purposeful, knock them down, knock out all the stops and then squeeze them? Like, how much of that do you think is by design, and how much of that do you think is more just the mechanics of the market, where all of these things get triggered at the same time? And how much of that do you think is actually done by design?
A high majority, greater than, I think it's hard to put a number on it, JC, but I'd say the majority of times when you have a strong stock and it seems to be holding up, then you see a little shakeout. I think those are generally manufactured, just like the morning gaps lower in a strong uptrend. It's the same thing. A big institution says, "Hey, if I can sell, short 100,000 shares in the pre-market and get this thing, knock this stock down $1, and then I can buy 500,000 shares. Why wouldn't I do that? Because I'm under allocated in this stock. I can then get 400,000 shares down low, probably near the lows of the day, probably below the VWAP, and looking at this and saying, now I'm able to move this stock a little bit. And, it's not without risk, though. That's the thing. I mean, we can call it manipulation. Manipulation is a so-called dirty word, but it's just market mechanics. This is how people position themselves. The market's it's a dirty place. You got to be, you have to have sharp elbows.
Sharp elbows.
We got some good questions in the chat for Brian. One is they're curious about the vehicles that you use. Are you still common stock only guy? Does he swing calls and leaps is the question.
Not leaps so much, but I will go out a couple months sometimes. And the problem with going out a couple months is I
buy calls.
What's that?
You'll go out a couple months.
Oh yes, sorry. Yeah. So I'll buy calls and puts. I'm that's as advanced as I get in options. To me, they're a way to manage risk.
Is
to
it
say
for you, or are you betting on individual stocks with these options contracts?
Mostly individual stocks. I do a lot of ETFs, and I do some of the levered ones. I do some of the levered stocks as well. So like if you want to trade Coinbase, why not trade CONL, double Coinbase long? It's like, what is it, $50 per share, CONL. Yeah, so 51. And you've got Apple double long, you've got Apple short, you've got NVDL. So I'll trade those as well. But for options, it's strictly buying premium. I'm a premium buyer, and I do it when I see a stock that I say, I'd like to have this stock, but I think there's too much risk in the market overall, but I want to have a position. So rather than just buy, a quarter of my normal size, I'll just put partial risk into the call options and kind of give it a little bit of a shot. And I'll tell you, I'm picking up my options activity because of this new brokerage, public.com, where they pay me. I don't pay a commission and I get a rebate. It's the most insane thing I've seen with options. I love it.
I didn't know that you could trade derivatives on public. I thought there was mostly treasuries.
No, that's the only reason I opened an account.
No kidding.
Yeah.
Interesting.
I get paid. So I'll get paid on 10 contracts, I'll get paid $1.80 back. So I don't pay a fee So normally you'd pay what, $6 or something like that.
Okay.
So you don't pay the $6, or if it's 100 contracts, $60, and you get $18 back as well. So if you buy $1,000 worth of premium instead, on 100 contracts, you're not paying $1,060 plus SEC fees.
Yeah.
Instead, you're paying $982.
So this is typically something that mostly the new school brokers are able to do. It's based off of their rebate income from what I understand.
Yeah, they're sharing the rebate.
And some will share more than others.
Yeah.
The old school TradFi firms tend to keep that rebate income. It's pretty material to their business too.
It is. I mean, but it's kind of like I think we're at a turning point here for options trading, because it's how it happened with Robinhood, is that they were the first ones to go no commission,
and everybody follows.
Everyone fell right after that. So hopefully it happens with options as well.
And then there was that free, there was like a Robinhood for options. I remember talking to the founder, or maybe not the founder, but one of the people that worked there. And then Robinhood added options, and then that company disappeared.
Oh,
yeah, it was called Gatsby.
Now there's another one.
Oh,
I don't know who the hell trades options on Robinhood, though. Frankly, I would be worried about my fills.
Well, I'll tell you, it's the same thing. It's the same thing on public, and it's the same thing anywhere. If you're going to trade with them,
Brian Shannon up there in the Rockies, the Wi-Fi.
Oh, there we go. We're back. Yeah, you've got to use limit orders on options contracts and realize you're going to miss some of them. So those spreads are so wide, you're just asking to get taken advantage of.
Yeah, that's right. All right.
Brian, before we let you go, I did have one more question for you. So for those of you who don't know, Brian Shannon, a pioneer in the industry. I've been watching his YouTube videos for almost 20 years. Back in the mid 2000s, I used to run home after work to hear his, thoughts on the market for the day. I mean, that's how long.
Can I get an impression, JC?
What's that?
Can I get an impression
Of Brian Shannon?
Yeah, you've done these for me.
Hey, this is Brian Shannon, Alphatrends.net. Today is Monday.
I'm not sure I make that face, but
dude, one thing for sure, if you go back to Brian Shannon's first video ever, first couple of videos ever, and you listen to him today, the voice is exactly the same. Like
same intro,
exactly the same.
Same watch list.
A little less hair up top, a little more hair on the chinny chin, but the voice is the same. Here's my question to you. Technical analysis pioneer, wrote multiple books. We'll share the links in the show notes. Of course, make sure to get Brian Shannon's books. But for years now, you've talked about this like core position in crypto, and you were involved in Bitcoin early on, very successfully. I feel like you have this like fundamental view of crypto and Bitcoin that maybe you don't share in AMD or Caterpillar or whatever else you're trading. Do you think about them differently? I'd love to hear your thoughts on that.
Are you a hodler?
It's actually the opposite. I mean, obviously, I wish I was a hodler, right? One of my best trades was I had 6 Bitcoin at about 500, and I forgot about them, and I sold them at 28.5. So that was my best trade in there. That was 59 times increase. So I wish I was a hodler, but no, it's actually the opposite. I really just view them as gambling products that have the lack of fundamentals is what keeps them interesting to me. A lot of times, newer growth names, before they're profitable, that's the best times to trade them because they're trading on future expectations and they don't have the ability to disappoint as much. So, but with Bitcoin, now we've got the ETFs, we've got limited supply, constrained supply. So, fundamentally, I guess I have a long-term belief that they are more likely to go higher. I don't know the reason for that. I still don't know the purpose of Bitcoin. I understand blockchain, but I don't understand why we have Bitcoin.
But you understand and like the supply demand dynamics, just in the sense of limited supply.
It's a great trading product.
It was the white paper on blockchain technology, and this was the vehicle that was used. No.
Yeah.
I think
it was the first one.
High level opinions like this, if you hold them loosely, like I agree. bullish Bitcoin for
Listen, the
reasons.
three of us knuckleheads don't know shit about the blockchain, right? So we know that. So now we can try to, think about it and figure it out. But we're going into this endeavor knowing we don't know. And there's like 4 people on the planet who do know, and none of them are in this group.
Well, we also know trends too, right? And when you zoom out on a Bitcoin chart, is there a better trend out there? My entire career, is there a better, stronger trend?
Multi-year base, multi-month base within that multi-year base. There's a reason Brian Shannon's excited, right? It's not like we're extended into here and it's going to be tough to break out. Like it's been building, right, Brian?
It is, yeah. No, we're like I said, we're on the way right now.
So Brian needs to leave, and so do you. But there's one more fun question in here that I just wanted to throw. This is from the chat also. Will B. Shannon be buckshotting AVWAPs on the GameStop 1 minute chart today? Like on a day like this, when you got some meme stock moving 100%, like do you completely ignore it, or you can't help yourself? You're in there like whopping it out and trying to figure out what's going on.
Whopping it out.
Hopefully I'll be busy with other things, but I'll take a glance and I'll drop some VWAPs.
Okay.
See what's going on.
He'll dab.
How can you
Yeah.
not?
All right.
Guys, make sure to read Brian Shannon, both of his books. They are complementary to one another. Technical analysis using multiple time frames has been instrumental to everything I've ever done in the market. The ability to analyze a market on multiple time horizons, starting with a longer term view and then working your way to a more tactical perspective. I can't think of anything more important, and it's applicable regardless of your time horizon. So if you're a day trader, right, Brian, go one level higher and look at daily charts. If you're more of a swing trader looking at daily charts, look at your weekly charts. If you're a longer term investor, then looking at weekly charts, look at your monthly charts. In my case, I'm looking at daily, weekly, and monthly. Highly, highly encourage you. And then if you're a day trader, you're looking at 1 minute, 5 minutes, 10 minutes, right? You're looking at multiple time frames. That's a huge advantage, right?
Always, yeah.
And then the more recent book, of course, Anchored VWAP. Maximum Trading Gains with Anchored VWAP. Highly encourage you guys to get it. Read them both. Must reads. We'll drop the link in the show notes.
Love you, Brian.
Good chat with you guys.
Brian Shannon, Alphatrends.net. Let's go. My man. A pioneer in this industry. Pioneer. This dude has been making videos on YouTube about technical analysis for so many years. So many years.
You heard it here. Brian Shannon, Bitcoin will resolve higher this week. Wow, what a treat for the morning show. What a treat for the morning show. Did I hear that right? I thought I heard that.
That's getting clipped. That's getting clipped. You heard that right. Okay, so it's 9:34. Here's what's going on. Just watching GameStop, obviously, off its pre-market high. You want to keep an eye on that. 47.50 is the high of the move right now. So we are, $9.5 off that. But that's going to be sort of my indicator for risk for the day, right?
Is GameStop?
Indicator for risk.
No,
right?
That's a terrible idea.
No.
I don't think it has anything to do with risk aversion or risk appetite at all. It doesn't matter. It's not so much in a vacuum GameStop because there are peripherals and other stocks with very high short interest that are going to be moving. So it's not an exact vacuum, but let's put things in perspective. What's happening in GameStop has no bearing whatsoever at all with respects to risk. And Spencer, I love you dearly. I could not disagree more with that comment.
All right. Well, we shall see. I guess that's what makes the market.
More. And at the end of the day, you can call me out tomorrow. Be like, JC, look at a chart of GameStop intraday and overlay the S&P. They look exactly the same. I highly doubt you will be saying that.
Okay. We shall see.
Maybe you. In fact, I hope you do, actually, because that would be cool. It's just, I'll take the under.
All right.
All right, guys. I am out. We got a big conference call tonight that I got to get ready for. 6 p.m. Eastern time, monthly chart strategy session, the most important charts in the world, and more importantly, what we're doing about it, right?
There's the code right there. The link is in the chat. We'll see you at 6.
Love you guys. See you at 6 tonight. Adios.
All right. Before we bring Mr. Cully on, let me just run through some headlines because we've got a few headlines here. How's that sound?
Yeah.
All right. Some M&A. Feels like every day we got something M&A related here. So got a couple headlines this morning or from over the weekend. The Wall Street Journal reported that Boston Beer Company, Samuel Adams, is potentially going to get taken over by by Suntory, the Japanese Suntory, right? That's Suntory, the Japanese whiskey maker.
Fantastic whiskey.
The Japanese, let me tell you, I was unaware until, I don't know, 3 years ago, 2 years ago, that the Japanese do whiskey extremely well. I had no idea.
It's lighter in color and density. It's a more refreshing experience.
Yep. So anyway, so Suntory is in talks to acquire the Boston Beer Company, the owners of Sam Adams and many other.
So the United States is trying to successfully make it so that absolutely none of the booze,
dude, I know,
United States and is branded as like the most American thing we know is actually going to be made here.
Dude, no kidding. Between InBev, right, which is like from Belgium, and what's the Mexican conglomerate? There's a lot, and they're all not in the U.S.
It's just economics, though, isn't it? Like the production process is cheaper, unfortunately, outside of our borders.
I wonder if as much attention will be paid to this potential deal.
InBev was a big one, yeah.
As the Japanese takeover of U.S. Steel.
Oh, highly doubt that. Highly doubt
you
it.
Think?
Highly doubt it.
Okay, we'll see. Elsewhere in M&A land, Waste Management is acquiring Stericycle, ticker SRCL, for $62 in cash. Total enterprise value of that deal is $7.2 billion. So congrats to all you SRCL shareholders. Autodesk not going to restate their earnings. So remember there was that accounting question from a couple months back.
What's going on here, though, dude? What's going on with these guys?
I don't know. They're not. They said everything is kosher.
All right.
So stock is up today, 8%, 8.5%.
Okay.
And elsewhere, Spotify shares up like 6% now, 5-6%. They are raising prices on their premium subscription. They're raising it by $1 in the US. So
fine, great.
I don't pay for Spotify, but everyone else does, seems to. So
big earnings this week.
Do we have a calendar? Fonz, you want to bring that calendar up? This is sort of like the end, right? We have reached the end of the earnings cycle. Last week was sort of like the retail week. This week we get, stragglers, but we got a handful here. Let's bring it up here. What do we got?
Yeah. Oh, GitLabs today.
DocuSign. I don't know.
Isn't it 0 yet? That's crazy.
Yeah, I don't know. There's nothing here.
No, nothing here excites me.
I mean, Lulu excites me. Lulu excites me. GameStop doesn't really excite me.
GameStop.
Yeah.
Yeah.
I don't know.
Vail Resorts. Braze. That was a nice chart recently. What's Braze doing?
Philip Van Houston, PVH. I don't know.
Which one is that again? We just looked this up. I already.
Yeah. It's I don't know. All right.
Watch last week's shows.
Yeah, that's right. Okay.
Let's talk about this nat gas.
Yeah, all right. You want to do it with Ian?
Mm-hmm.
Mr. Cully.
Good morning, guys.
Ian.
What's happening?
Wait, before we ask Ian about natty gas, Ian, how you feeling, man?
Feeling a lot better.
You better?
Yeah. It was a rough week, but I think last weekend was really the worst of it.
No doubt.
Yeah, I pretty much slept for 2 days straight.
All right.
But,
we're back though.
Yeah, we're back.
Cool. All right, what's going on with natty gas here?
Yeah, I mean it's ripping. It's kind of what it does. It's still consolidating within a tight, what could be a potential flag or pennant here. I think upside resolution takes us back maybe to 350. But we'll see. I mean, we've been talking about natty gas or bullish natty gas. I think it's really interesting to see crude oil breaking down to fresh 3-month lows today. And this is after OPEC announced that it's gonna make voluntary cuts.
Oh, yeah, that's right. I forgot to mention that. That was in the headlines as well. More OPEC cuts.
You think, hey, they're making cuts. We'll get a little bit of bid here in crude oil, and it's the exact opposite. So I think that's there's a lot of information in today's price action in crude oil. When it comes to metals, so if you guys are interested in what's going on in the metal space after that false start and the epic false start in copper, I got my eye on palladium. Palladium's at a critical level, a key extension level, and also just a lot of price memory going back to the early 2000s here around this 850. 840 zone here in palladium. So we have a hard time placing palladium in whether it's in base industrial metals or the precious metal basket, but it doesn't really matter. It's a metal, and if copper dripping higher, or if it's gonna rip higher, gold hitting new all-time highs. In that environment, palladium should, at the very least, stop going down. So I'm watching this 850 level here in palladium. Break below there would be a big red flag for the bull market and precious metals and just metals in general.
Do you wait for the trend line break, or no? You just buy this weakness?
I'd like to see a trend line break. I'd like to see a little more constructive action. Took a swing at palladium during the spring, and it's just been really messy
right
since. So give us some time. There's other opportunities in the metal space besides palladium. So yeah, I'll leave this one. Let this one consolidate further.
And how about like the other materials groups? Steel stocks continue to look okay. Aluminum kind of heating up, right?
Yeah, aluminum looks good. Tin, zinc, even lead is starting to look constructive. Also, we see this base, but our equal weight base and industrial metal index finding resistance at a logical level. Those 2023 highs.
Yep.
As we momentum registers a bearish divergence. So to see some consolidation, some sideways chop here makes a lot of sense. Just other areas of the metal space to keep an eye on besides Dr. Copper.
And precious, where's your head at over the short term?
I mean, everything looks good so far. I mean, gold's consolidating, just below our initial target. Silver's holding above 30. As long as silver's above 30, it's hard to be bearish.
Right.
And then the individual mining names, most of them are holding their breakouts. Our trades are working, whether we're looking at the ETFs or again the individual names. So there's a lot to be excited about in the metal space for sure.
Guys, if you want Ian's latest report, he just put out a couple weeks back. He just put out his latest free report on gold and precious metals. And the link to get that report is right there. QR code on the screen. Scan that code into your email, and you will automatically be sent Ian's latest.
These cryptos are already moving out here. Brian Shannon moving the crypto market right here on Stock Market TV this morning. Out the gates, I'm trying to enter some short-term positions in Coinbase. I got filled on Mara, not getting filled on Coinbase. You can straight up from the open stuff. Leave my orders out there and see what happens.
What do you? What's your level in Coinbase?
I'm just trying to get involved, dude. I'm trying to put on a risk reversal. I had a net credit, now it's a net debit. I'm not going to take this, Phil. So I'm looking out like for this week. I want to play this move. Been waiting for these coils to go. Kind of just been buying weekly, monthly calls in a number of these different vehicles. And right now, I only own Coinbase Common. I want that juice, boy.
Steve, I did buy your Uber, and yes, I said your Uber.
You bought my Uber
last week on Friday.
How'd you do it? You just went with the Common, right?
Yeah.
That's the move.
I'm not getting too cute.
No. This is your level. If you're wrong on this trade, Spencer, you should lose honestly less than $1. Like I don't think you want to even bother owning this below 63. Yeah. You can buy it back.
Yeah, like 60, like 62 and change. Yeah,
that's fine. Right? Yeah. You lose $2, whatever. And then what that does psychologically for us as investors, right? Say Spencer enters Uber here at 64, stops himself out end of this week at 62. He loses $2. He's not hurt by it. He doesn't hate Uber stock. There's no ill will in his mind. So then when it triggers again, back above whatever it is, 64, he'll buy it again. He wasn't hurt. He's unaffected, right? It keeps our minds nice and clear and free of any trader's guilt.
Yeah.
And you take these small losses, and you could keep swinging. And that's what I've been doing with these these crypto vehicles, waiting for this resolution. And Bitcoin, I just keep swinging. When we get it, it's going to hit, and it's going to pay for whatever losers there were. So it's just, sometimes we do the show in like the first half hour of trading, so it does make things difficult for people sometimes from an execution standpoint.
So I'm keeping an eye on on trading halts every time, right? Because every time we get a big GameStop move like this, and this is unusual. Chipotle just got halted, but I wonder if it's just because it's such a high price stock that, but it's a volatility halt. So it's
Chipotle.
Yeah.
Why halted for volatility?
That's what I just saw.
Let me check.
I just saw it come across my screen.
My cat would just move.
Weird. I mean, it is a $3,000 stock.
Whoa.
But yeah, weird.
I don't know about it.
Anyway. Yeah, something there right here. Something there right there.
Are you saying GameStop was halted or Chipotle?
No, Chipotle. They say something funky's happening.
I don't think so.
Oh, wait.
Yeah. What happened? Is this chart right?
Did they do a split?
Yes.
Yeah.
I think so.
Okay. Well, some of my, I guess the split happened today.
There you go.
Some of my charts aren't reflecting that.
None of the data is dated on any of my providers right now. So.
All right, that's weird. Yeah, it's a stock split. Forget it. That's very confusing and annoying. So, my bad.
Don't watch the show, Matthew, if you know so much about stock splits.
I forgot it was today. My bad. Oops. But also, my charts aren't even reflecting said split. Like Thinkorswim. I'm looking at it right now. So, go figure.
I'm not really.
I don't know what's going on. Moving on. I don't know what's going on there.
So, I got nothing else for today. I think we could just shut this thing down.
Well. Do we got any recess? I feel like we might have some recess to talk about.
As soon as I started talking about Knicks, Rangers, Madison Square Garden, New York City sports,
they all lost.
Completely shit the bed and blew their series. Lost in disappointing fashion, I would say, both teams. So I have nothing to say about sports, maybe ever again.
All right, let's do some recess and we'll do that.
Nobody's doing anything fun. Dawson, I've been out of that Apple trade for I don't even know how long, but we talked about it all on here. I was in and I was out. That was when I sold the puts around earning. That was a long, long time ago. I don't even remember. It was so long ago. Nixon A, yeah.
Yeah.
Do you guys have recess? Because we're just standing here staring at each other.
My recess was that we finished The Wire, everyone. We finished it. Yeah, over the weekend.
You guys, that was some speed. How many months?
Yeah, I mean, it took us like 3 months.
A long show. Yeah, okay. Still,
It took us like 3 months. We started in March.
seasons? 6 seasons? 7?
5 seasons.
5?
What was your
Yeah.
favorite season?
My favorite season is always season 4. With the kids. I just love the kids, man. Like that whole plot.
Yeah. Season 1's classic, though.
Season 1 is definitely a classic, no doubt. But very sentimental. And now we're moving on to some more current shows, because that show we were doing about one a day pretty much for 3 months, like I said, give or take. So that's the big thing in my life. That's all I got.
So what you got next? What's the next show on the?
No, we got to watch like Bridgerton and that stuff. Like it's back.
No,
Yeah, which actually is a bit of a guilty pleasure. I do enjoy that show.
Good. I enjoyed Bridgerton. Yeah, there's a new season, right?
I know. We started watching it last night. But here we are.
They're tapering. They're not releasing the entire season at once.
Yeah, I think it's 4 episodes are out, and then the next 4 come out in a few weeks or something like that.
Yeah.
I'm not rewatching Lost. I already did that. Okay, I've seen that show 3 times. I can't. That would take me 6 months to watch that show. I can't do that. I can't. But that's what I got. The recommendations: if you haven't seen The Wire, watch The Wire.
Good. I think it's a great show. I would say do Sopranos next, but I think she gets to pick the next series.
I would love to. I have to convince the boss. But I would love to watch The Sopranos.
So I finally got filled on a little weekly jingle here. So all I did was I sold the 220 puts. I bought the 255 calls, and it was I was net zero on it. So basically just financed long calls and looking for an immediate move. This will be a couple-day trade.
All right. So a bunch of links from today. I'll update the description to reflect them. But the link at the top of the chat is for tonight's conference call, JC Parets, 6 p.m. Eastern time. I also threw a link out for our freshly squeezed report, how these guys approach short squeezes. The latest report went out over the weekend. You can get that as a member of All Star Charts Premium through the link out there to Brian's book. We'll drop all those in the description. And that's what we got. So it is Monday. On Monday, we do the Flow Show with Strazza and Sean at 11:30 a.m. Eastern time. So that's where these guys will be. And that's what I got. So thanks to Brian Shannon for hanging out as always. Thanks to all you for hanging out. Thanks to Ian Culley. Go make some money. Take care. Catch you later. That's it.
Peace.
Have a great week. See you guys.